Hey, everybody. Today we are going to look into the 2 best habits you can have to not lose money. So that should be interesting. Also, we are checking back on our predictions from 2 weeks ago, which we were wrong, but we're going to update that. I'm here with Lee Duffy. He's in the UK as always.
Hi.
Good to see you, my friend. So let's see how we did. Hey, everybody. Thank you for joining us. Hey, Lee, how are you doing today?
I'm good, thanks. How are you doing, Kim?
I'm doing great. Thank you. So we made some predictions over the last couple of weeks. And 2 weeks ago, we made a prediction that did not happen. But we also forgot that it was a holiday the next week. So Easter happened. So our prediction for the following week was we weren't right. Maybe not yet. So it's going to be interesting to see if we actually were right.
Well, if you remember, we used a particular part of the product of MKTGhost, which is called the long wave. And it's called the long wave because it predicts well out into the future.
So let's go back 2 weeks, Lee. Tell us what we were predicting then, and then we'll go from there.
So 2 weeks ago, we were saying 111 and 112, possibly even 114 on Euro US dollar.
And then what happened?
So last week, we just clipped 1.11. But when I show you the chart, you'll see why I think it's a clear win for us. It's missing by a smidgen. What I've done here, Kim, is I've marked when we said the prediction, the 11th of April at 8 p.m. Central European time. And we said it would go up to 111 to 112, which is these 2 dotted lines here. And it pretty much went up in that direction, but it just didn't quite go in.
Yes, I would love to know by how much.
We missed our forecast by 0.00200. It is, what is it? It's a fifth of a 1% of a cent.
Yeah, that's a win. If we're getting that close, because we're not going to be able to hit exactly every time, and that's impossible. So if we give traders an idea of where it's going to go, we give them a direction that they can count on. That is something they can bank on. If we give them a price that we can hit within that close, hey, that's a win. All right, so now what we need to do is talk about this week's prediction. And I just realized my earpiece is sitting on my shirt. So guys, if you were wondering what that was, it's so I can hear. I have one in here. I usually don't put the other one in, but they're both in now. So if I start yelling like I got headphones on, I'm sorry. All right, so back to the important stuff. The predictions for this week. What do you think, Lee?
We are seeing some movement on the risk index, the MKT risk index, that are very important because we're at a very critical point. This is all looking like we're going to see another stock market up, and we're going to see Euro up, which is in line with what we've seen on the long wave. All of that is what's being predicted right now, and it's going to be a real surprise to people.
So it's contradictory to what the market thinks right now?
It is.
So we're still like last week, we were right around that 41 number, and
Yes.
we're still floating around there?
Absolutely. And the issue is, if we go into asset destruction mode, we're going to see Euro come off. That would be normally preceded by a spike on the MKTRedline Pro version. We would expect that to tell us it's going to crash down, dollar strength is going to come. But we didn't get that. We've been watching that for days. It nearly went there. Let me show you the history and why this is a difficult prediction.
Okay.
So, Kim, what we've got here is a history graph showing us where the MKTRedline Pro version has been.
So it's a historical version of the graph, a brand new feature, right?
Brand new feature. Allows you to look at it from a weekly perspective, monthly perspective, and you can drag it to look at any particular area that you are interested in. But let me show you why this week's been tricky. We've seen it almost go up into the amber zone several times this week, and we're hoping that dollar's going to have a little run of strength, and that would mean euro US dollar goes down. So you remember that we used the long wave, which is this orange line here?
Uh-huh.
It is clearly showing 111 to 112 real soon. But the problem is we're now on the underside of this red zone, which we call the absolutes. And that means it's going to find it a little difficult before it makes that move. We need to see the risk index come down.
So the risk index is 63% correlated to the euro US dollar. So that will tell you sort of a direction you need to go in then, right?
It is, but because we're on that borderline, that's why I'm super sensitive to it at the moment in terms of making a prediction. What I think is going to happen is this line we see on screen in white and blue in this red zone that looks like this, that flashing white zone, that is where I think it's going to hang out for the next couple of days.
All right, good. So I think this is a good thing we were talking about one of the best habits to have to prevent from losing money is knowing your volatility. So let's look at the risk index, because there's a couple different ways in the world to know your volatility, and we think we have the better version. So you have two ways to not lose your money in the market when it comes to avoiding negative events. One of them is the VIX, which most experts agree is not a predictive indicator. Ours is MKTRedline. We have the gauge, which warns you of those events, and we have the risk index, which tells you about volatility. If the number is above 41, you're in volatility mode. If it's below that, you're in the calm markets. So Lee, what do we do when we're in volatility, when we're not?
That's a great question, Kim. I mean, what we want to do is we want to change our strategy. If we're in high volatility, fear, destruction mode, we want to use less leverage. We want to trade more sparsely into the markets. We want to use less risk. And when we see spikes, like the one you saw on the MKT risk index, we're probably going to have to hedge our way through that. When we're in the calm markets, what we want to do is to be a little bit more liberal in our trading in terms of what we want to go for, how we're going to do it. We also think about what instruments are going to be appealing to trade.
All right, so Lee, that's great advice, and it makes perfect sense. You're in volatility, less risk. You're not in volatility, more risk. Leverage more, make more money. Good. So we're going to take a quick look at Ghost right now. What do we got here, Lee?
So this is the new AI arrows that we're generating. They are basically reading the hologram for you and giving a prediction for you to see where it thinks it's going to go. They're giving you a prediction. They come in clusters. You can see when they switch. It's very intuitive when to get into a trade, when not to. It's really useful.
This is the effort that we're doing to put into the product to make it something that everyone can read and everyone can use. All right, folks, there you have it. The two best habits to not lose money in the market. Number one, get the MKTRedline gauge. Avoid negative market events. Keep the money you've earned. Don't lose it. Protect it. And also, look at the MKT risk index. That'll let you know about volatility, whether to risk more, risk less, keep your money safe. So, as we always say, predict, profit, protect, and because we actually were right with our predictions, how about a like? And even better, a subscribe. Come back every week and see how we're doing. Thank you very much, and we will see you next week.